We have an increase in the frequency and severity of the claims that we're having. We have an increase in the cost to rebuild and replace the materials through construction and labor, and we don't have enough capacity in the insurance markets to be able to spread all this risk. I would say there's 3 degrees of pain when it comes to this, and it really depends on who you are, where you're located, and what your company or entity does. But the first level of pain would be really expensive insurance, particularly for property. 2 would be a lack or an ability to get enough expensive property insurance. And 3 would be no expensive property insurance for you at all, which can create a lot of unique challenges for your business. There's 3 immediate strategies that make the most sense. The first is making sure your property values are correct. And believe it or not, a lot of times folks are estimating what their replacement cost values are versus the book value that they have. The second thing is to make sure that you have a comprehensive renewal strategy. Buying property insurance is something that should be a long-term project, basically starting on next year's property insurance renewal the day after this one ends, versus waiting until the month of or the weeks before to find out how bad the pain is going to be. And the third option is to consider alternative ways of financing your risk. Perhaps buying less insurance and making more investments in hardening your facilities and making them more resilient against loss. I would say everybody's impacted. First of all, property insurance premiums are rising in double-digit increases at a rate way higher than the Fed's target for inflation. So that's creating unique budget challenges for everyone. A lack of capacity and the ability to buy enough property insurance is creating issues with other folks' debt covenants. But really, the impact of increased claims from natural disasters and other things has shown a light on everybody's risk. If you have any skeletons in your closet or any locations that aren't seen as perfect in the eyes of the insurance industry, there's now more of a reason than ever to increase your premiums or reduce your coverage or not have anything available for you at all. So it's never been a more important time for our clients to put their best foot forward and make sure that their risk is as clean as it can be and that we've told that story as well as we can. Honestly, if you have the right partner, that information should be coming to you proactively. Think about a change in the tax code. Would it be on you to go out and research and figure out what that is, or would you expect your accountant to be working with you in advance of those changes being made by the government and after they've been implemented? And it's the same thing with your insurance and risk management advisor. You should have someone like Henriott with a dedicated place where you can get information that you're looking for and also know that you're going to receive regular updates well in advance of your renewal when you have time to create actionable decisions around that information. One, the market's not going to get any better anytime soon. 2, make sure you have accurate property values. 3, make sure you have a renewal strategy that encompasses several months, not several weeks. 4, make sure you have the right team around you to examine all your insurance and risk financing options.